Wow, what a difference 1 week's worth of data makes. We got inflation data out, and we'll see how it impacted rates and what the Fed's likely to do. As we get into this though, one of the things that's going to be obviously clear is that things, well, they're about to get higher.
Higher, baby. Get higher, baby. Get higher, baby. And don't never come down. Freak.
Well, one thing that definitely got higher this week was inflation. So when we look at the data here with inflation, the CPI report came out showing 0.4% for the month, which was hotter than the estimates of 0.3%. But more importantly, year over year, inflation has increased from 3.2 to 3.5%. And even the core rate, which strips out food and energy prices, also went up, as well as the PPI, meaning that the Fed is saying that they have more work to do, that rates are likely to be higher for longer, and that inflation is something that they feel they have not totally tamed. And boy, did the market not like that. If you look here with mortgage-backed securities, and I'm going to zoom in a little bit here so you can get a feel for just how big of a move this was. This right here is mortgage-backed securities are going down, rates are getting higher, and look at this giant move on April 10th, just how far we had the market correct based on the CPI coming in, meaning that the Fed is saying, and the market is starting to believe, that rates are going to be higher for longer. And remember, they control the Fed funds rate. Interest rates, really nothing happened. The Fed did not adjust or change anything other than their statements. But remember, the market is always trying to price in the future, and the market is believing the Fed that, hey, we think the Fed funds rate is going to be higher for longer. Market's still thinking maybe there could be 2 rate cuts. Some people saying 1. That's the thing with data, you never really know. When you look at interest rates themselves here though, this was the high that we hit on this cycle, getting close to 8%. We dropped, and then we've kind of been on this slow trickle up. But this was this big jump on April 10th. Rates went almost up almost 1/4% based on that information. Again, that's the market pricing in what's likely to happen. And that's back to higher for longer, rates higher for longer, and of course, so goes rates, so goes the real estate market. And one of the things that's also going higher is supply. And that's because rates directly influence supply. So as sellers put their homes on the market, obviously if there's no buyers to buy them, the housing supply is going to go up. And I thought this was a really interesting chart showing the shift between March 2023 and 2024 and inventory going up. In Florida, really a lot of inventory coming on the market here in Florida, especially different areas of South Florida, up 57%. And I like this really interactive map showing, because really a good measure is where we at compared to pre-pandemic levels. And we're only 14% off of that. You can see some other areas are still way off that. That means inventory is starting to build here in Florida. And again, so goes rates, so goes the market. And I really expect that supply to continue to go up. We did finally get back over 4 million transactions nationally, and I think that trend will continue. But if rates stay higher for longer, then that means that supply will just grow, continue to grow until rates fall. And when that happens, I think that the supply will go down rather quickly, because they're starting to get a lot of pent-up demand, because people are saying, hey, we're going to wait until rates fall. And this Redfin article is saying nearly 40% of renters think they'll never own a home, up 27% from last year. And exactly what we're talking about here, this is what people are saying. And it's important to know this, especially if you work in the market. 44% of people think homes are too expensive. 35% think they don't have money for a down payment. 33% the ability to afford the mortgage payments, and 32% think mortgage rates are too high. Meaning that as long as rates stay higher, people are going to say housing is expensive, because people, everyone, myself included, are payment driven. So that means that as rates stay higher, less buyers will enter the market, and supply will continue to grow. But if we look at actual mortgage applications and people starting to move forward in the cycle, this is the MBA Purchase Index, Mortgage Brokers Association, and this shows the amount of applications that are getting done here. And you can see we're really been in this low for a long time. Compared to where applications were at, look how high they got here in January of 2021, January of 2020, and then we've just really kind of fallen off of a cliff. And then as far as refinances go, look at this, where we were at back in, this is when rates were really dropping in like 2020. Look at the boom in refinances right there. and look how low it is right now, right? Because people aren't going to refinance when rates are as high as they are, but we are getting some upticks in refinance. And why is that? Because as inflation, a lot of these things affect people at home. A lot of people's wealth is in their house. And so we are doing some cash out refinances, even though people are taking a higher payment because we're able to wipe out all of their debt. But for some people, especially with inflation as high as it is, it really might be their only way to lower their outgoing expenses. So we are seeing some upticks in cash out refinances. And then I like to look at the health of the Florida housing market. And one of the numbers that I like to pay attention to are homes with price drops. And we have kind of climbed back up there where we have almost 30% or plus homes with price drops. And you can see we had fallen, much lower. 15 to 20% was kind of normal. And that really just makes sense, right? As rates are higher, demand is lower, it's going to make sellers more flexible, which if you're a buyer is a really, really good thing. Now, me personally, would I like to see lower rates? Sure, selfishly, yes, that creates more people that want to buy. But I really want, doing this for 20 plus years, a more healthier market. We have about 4 months of inventory here in Central Florida. 6 months is considered balanced. And I think we're headed more towards the balanced market, especially if the Fed does keep rates higher for longer. And I really think that's actually a good thing. You do see price drops, but again, that just means that sellers that don't price their houses right either have to take it off the market or correct with where prices are. And if you're a buyer, you're getting more flexible sellers, closing costs paid, and more choices to buy a home, which I think is a great thing. And if you're like me, real estate agent or mortgage person, there's plenty of buyers, plenty of people buying and selling, but the market will continue, in my opinion, to improve throughout the year. Rates will fall. Who knows how fast, but no one predicting higher rates. I really believe by the end of next year, rates will be substantially lower. And again, higher rates is an entry point into a less competitive market. And if you're a first-time home buyer, that's when you want to at least look at buying, qualifying. Don't try to time the real estate market. It never works. When you're qualified and you're ready to go, that's when I would buy a house. So again, pay your own mortgage, build your own wealth, and over time, you'll make a ton of money just by being a homeowner and making your own rental payment to yourself, which is the American dream. Anyways, that's what the data says for now. We'll keep tracking it, keep seeing what the Fed's saying and what inflation does. And as more information becomes available that moves the market, as always, I'll cover it here. Have a great day, great week. Talk to you soon.